The RBI has released the current account deficit numbers for the second quarter of this financial year. Anirudh Ghosh joins us with all the details on the numbers that they are throwing up. Tell us, Anirudh.
Well, Nisha, just to point out, firstly, this has come as a huge surprise given the fact that this data was expected much later than today, and of course it's come in at a very low level as compared to earlier. It's come in at just $5.2 billion, and that's about 1.2% of GDP. Of course, much lower than the earlier numbers that we've been seeing at about 4.8% of GDP. So clearly a huge surprise as far as these CAD numbers are concerned. Remember also that these are preliminary numbers that the RBI has released. So of course it really does point to the fact that it has been a very good quarter as far as the export revival is concerned. So we've seen good growth in exports, and that's what's actually been given rise to these kind of numbers. Also, of course, the fact is that we've seen a record decline in gold imports. Oil imports also have come down a little bit. So clearly these two factors put together have actually risen, have given rise to this kind of numbers. And of course, at this point of time, the fact that the current account deficit has come down to such a low level will of course mean that over the year we're going to see a current account deficit number which is well within both the RBI's projection as well as the government's projection. Remember that over the last couple of weeks or so, we had seen both the governor of the RBI and the finance minister saying that they will be looking at bringing the current account deficit for the entire year well below what the RBI has been talking about. So clearly, well below $60 billion is what the projection is, and that's what it seems to be on track on at this point of time, Nisha.